and welcome to Money Minutes. My name is Lisa Pallavi Barbora. Most of you would have read about the big deal in this pharmaceutical space where Sun Pharma is acquiring Ranbaxy for around $3.2 billion. Now, if you are a Ranbaxy shareholder, it might actually be good news, as for every share you hold, you can get 0.8 shares of. Every share of Ranbaxy you hold, you can get around 0.8 shares of Sun Pharma. Now, after the news became public in the 2-3 days of trading that followed, Sun Pharma actually gained a little and Ranbaxy share was a bit up and down. If you do hold shares of either Ranbaxy or Sun Pharma, really what next is there for you to do? Should you sell the shares if there is exuberance in the market? Should you maybe buy more or sell Ranbaxy and maybe hold on to Sun Pharma? Experts we spoke to said that these are really difficult questions to answer, and there is no structured way to look at an acquisition or a merger. You have to look at each case on an individual basis and then analyze what's best for investors. Now, the starting point really is the technicals of it. So you do need to look at the swap ratio. In this case, what shares are you getting? And also, if there is an open offer, then you need to look at the open offer price and determine whether that is positive or not. If these things are okay and work in your favor, then move on. Really move on to the fundamentals. That's where the crux lies, and that's what's important. Is the new entity after the merger or the acquisition that has happened, is the new entity actually going to increase its market share, expand the balance sheet, and add to the existing earnings? If there is a tick mark on all these three things, then yes, it is worth remaining invested for the long-term investor. So it's important what fundamentally a new entity is going to do, and whether the buying company is going to be able to sustain the profits and keep adding to earnings in the new entity. So these things are important to look at, and that is what is going to make the difference on your stock price over a period of time. Now, also important is taxation. Now, if in case of a merger where you get shares of the other entity, you may not have a tax incidence if you sell shares. However, in case of an open offer, your tax incidence could in fact be greater than greater in case you tender into the open offer than if you sold in the market. So remember, the basics of investing don't change. If the markets have overreacted as a result of news of an acquisition or a merger and your stock has rallied far ahead of fundamentals, then yes, book your profits and maybe think of re-entering once the stock price stabilizes. If on the other hand, the market has reacted very negatively and your stock prices have corrected sharply, still wait for a quarter or two of earnings, and if earnings are looking accretive, then you hold on to your investment and don't sell in a hurry. That's all from me on this edition of Money Minutes. Do keep watching for more investment ideas and updates. Thank you.